Hey, Steve Saretsky here. As always, Canadian real estate market update with particular focus on Vancouver. If you get any sort of value or entertainment out of these videos, all I ask you hit thumbs up and subscribe. Questions, comments, put those below. I want to do a quick update on the Vancouver housing market. There's a lot happening. There's a lot of noise, and I'm going to kind of help you guys dissect it all here today. But people always ask me, when's the best time to buy? When's the bottom? And I think there's, no one's going to be able to accurately predict that with, conviction or consistency, I should say, rather. But there are kind of two things that I would be looking at personally. Number one is the central banks. There's really no point in being contrarian and trying to fight a central bank, right? I mean, they are the providers of liquidity. So when they are handing you liquidity, that's kind of the time to jump in and pump into the market. Basically make that trade, right? I mean, we saw it during the pandemic. They told you they were going to drop rates down to zero and hold them there for a very long time. They were pumping out, massive amounts of quantitative easing. And now they're telling you the reverse, right? Which is, hey, listen, we're going to grossly tighten rates here. We have to fight inflation. So there's really no point in fighting that here in the near term. But number two, I'd be looking for movements in the Canada 5-year bond yield, which basically prices your most important metric, which is your 5-year mortgage, right? So the central bank will price your variable rate mortgages through their interest rate channel, and then the markets will price in your 5-year fixed rate. So those are the two ultimate things that I'm watching, because at the end of the day, especially in these highly levered housing markets like Vancouver, they depend on what financing costs are, right? I mean, we've talked about this before, but when you take mortgage rates from 2 to 5, it's no surprise that housing activity has come to a standstill, and that's exactly what we've seen. We saw this again in 2018 when Greater Vancouver home sales for the year in 2018 hit 18-year lows for the entire year, because mortgage rates went to 3.5%, 3.6%, 3.7%, and it was simply too much for the market to bear. And so that's kind of exactly where we are today. We're coming off this frothy activity, and then you see this huge doubling or more of mortgage rates, and that's really slowed housing activity. So if you look at Greater Vancouver home sales down 35% year over year, obviously you're looking from base effects last June being a very strong month for home sales. But when we strip this out, we try to filter through the noise here. It's what this channel is really all about. This was the fourth slowest June going back to the year 2000. So 22 years of data, it was the fourth weakest month of June. So if you really kind of strip it out, we are seeing very weak levels of sales activity. Home buyer demand has moved to the sidelines as mortgage rates push up and people look for prices to come down and offset these higher costs of borrowing. And so where we're actually seeing the most weakness right now is actually in the detached housing market. Again, think of things that the detached market always tends to lead the market up and always tends to lead the correction. Condos always work on a lag, right? As people get priced out of detached and townhouse segment, they fall down the ladder into the townhouse market. And that's exactly what we're seeing. So detached home sales down 47.5%. You had townhouse sales down 34%, and condo sales down 25%. And so, one of the other things that I'm starting to look at is, we saw the real estate board publish, the home price index. And it's funny because that's what the media always tends to report on. But as I've talked about it before, that the home price index can lag by as much as 6 months, 6 to 8 months. And so when you see an abrupt shift in market conditions, right, in the market went from sizzling hot disco inferno in February to ice cold here in June, the home price index isn't going to be able to shift fast enough to adjust for the correction in home prices. And so you've basically seen almost no correction. We're talking, I think, 2% right now, they're saying, in parts of the market for the home price index. Guys, you cannot look at that home price index. You really have to basically have a realtor or someone that is competent enough to run a sales comparative analysis and say, what was the neighbor's house selling in February and what are they selling for today? And we're seeing, again, in parts of the market, in that detached segment, you're looking anywhere from about 10 to, on the high side, 15%. That's typically further out in the suburbs, but you're still seeing quite a bit of strength, for example, in the inner city condo market, because that segment just didn't really go up that much during the pandemic. There's not a lot of froth there, and then ultimately is where the best real estate is ultimately in the inner city, in the Vancouver inner city core. And so you're actually seeing is the largest corrections are happening in the suburbs. Fraser Valley home sales in June fell to the lowest going back to the year 2000. And so when you really strip that back and sort of unwind that and unpack it a bit further, you say, well, hold on a minute. Over the last 20 plus years, think how much the Fraser Valley has grown in terms of population, in terms of housing stock. To see the Fraser Valley enter into basically a 22-year low in home sales, not adjusting for the population and the housing stock. I mean, that is a completely illiquid housing market. And so that's where most of your carnage is. In fact, if you look at the Fraser Valley, home prices, if the best way to look at this right now is to actually track median home prices. So if you look at the median home price for a detached home in the suburbs, you're seeing a sharp correction there. And you're seeing that as well in the townhouse segment. The condo market actually appears to be holding up much better. But look at the detached and the townhouse adjustment in the median home price. Again, this is a lot of volatility. Housing markets are not like the stock market. They don't move around a whole lot. It's hard to capture them. Like, you can't just look at the index and say, okay, well, home prices are down this much. There's a lot of inefficiencies. But this should not be surprising. I mean, we've talked about it before on the show. We knew that there was a bubble building in the suburban markets. We saw houses in parts of the market were basically zero updates. People buying homes, for example, this one here in Mission, purchased for $700,000 and then reselling for basically $1.4 million. Nothing done but an exterior paint job. That's just not a sustainable trajectory. And then you factor on not only sort of the end of the pandemic era driven, migration to the suburbs, but also the doubling in mortgage rates has really killed off that market. And so, these are certain things that we're watching for as we move forward here into the summer. The one thing I will kind of point out that I think is important to highlight is if you actually look at Greater Vancouver new listings for sale, they've actually declined on a year-over-year basis. So there's nobody that's like rushing and panicking to the market, right? People see the market changing, interest rates going up, prices coming down. Nobody's flooding the market with new listings. What you are seeing is all these listings basically taking longer and longer to sell. Very few home buyers, and that is allowing the stale inventory to build, right? If every house suddenly takes 4 weeks to sell, it just allows this inventory to accumulate over time. And so if you look at months of inventory for sale, which is really, I would say, the most important metric because it kind of filters through a lot of the noise, months of inventory has now climbed to 4 months of inventory for sale. And that is actually, I would call that, the typical, they call that a balanced market at the real estate board, but I would actually call it a buyer's market. 4 months of inventory in the Greater Vancouver housing market definitely tends to favor the buyers. And so that's where you're seeing the price negotiations now favoring the buyers. But again, if you really strip this all out, if you're a buyer in this market, and certainly I got clients that are actively looking. If you actually look at it, there's not a lot of inventory for sale. The inventory in Greater Vancouver has actually declined. There's actually fewer homes for sale today than there was last year. There's actually 12% fewer homes on the market today versus last year. But what's happening is because the demand is so weak, because there's so few home buyers, months of inventory is still growing. And you're still getting downwards pressure on housing. So there's kind of two trains of thoughts here. Basically, inventory can continue to accumulate. Maybe you get a natural increase in new listings over time, and that will put more downwards pressure on prices. Or, you enter a scenario where do rates slowly and finally begin to come back down, and that ends that cycle. That's not my opinion. I think that we're in for a tough 12 to 18 months here in the housing market. And again, I don't really think any of this should come as a surprise. Guys, we've seen, if we actually zoom out, this has been an unprecedented, this has been the single largest bull market in history. The last 2 years, we had back-to-back years of record home sales, record price appreciation in large parts across the Canadian housing market. So it should not be a surprise to see the shift in housing activity. So as always, hope that helped. See you next week.